government taxes almost everything in life. We've never had a family say, I wish this check was taxable, and I hoped that it would be for less money.
There's a common saying that there's two known facts, in life, and that's death and taxes. Wouldn't you want to solve for those two known things? A dollar is buying a much greater than that dollar amount of death benefit that's tax-free the moment it's paid. So you actually create the exact opposite of taxation. You create an increasing tax-free outcome if you use it correctly. Is the death benefit tax-free?
Oh, we were chatting about this before we hit the record button. I would say generally, yes. Now, again, we do business in the United States, sea to shining sea, Canada, coast to coast. And so here are some things that are important to understand. So when you're working with owning a dividend paying whole life insurance contract, or ideally a system of contracts, the death benefits are paid to named beneficiaries. And generally speaking, they're received income tax free. Now, that creates tremendous estate efficiency, right? It allows obviously capital to transfer immediately and privately outside of probate. And the tax-free nature of that death benefit is probably one of the primary reasons that dividend paying whole life insurance plays such a major role in estate planning, business succession, family legacy planning. Obviously, the policy must be in force at the time of death, and the ownership structure matters in the way of who the beneficiary is of the death benefit. Now, this applies to both countries. In Canada, we're dealing with corporate-owned, life insurance contracts that have additional considerations like a capital dividend account, which is outside the scope of the question. We've recorded some great content on that. But the government taxes almost everything in life. And when you have properly structured dividend paying whole life insurance contracts, it definitely changes what happens at death. We've had to deliver a substantial number of death benefit claims in our professional journey. When we think of our collective team, all of our advisors on our team, people, every now and then someone dies. And when we deliver that death benefit, we've never had a family say, I wish this check was taxable, and I hoped that it would be for less money. It's never happened.
Definitely not. Yeah. So, there's not a lot of things in life, like you mentioned, that we can be assured are tax-free. But yet there's a common saying that there's two known facts, in life, and that's death and taxes. I'm like, okay, well, being that is the case and that is true, wouldn't you want to solve for those two known things with the one thing that takes it into consideration? Like there's literally a product designed to combat that.
The only thing that doesn't get worse when politicians meet is death. Okay, next question.
We love coaching here at Wealth on Main Street. That's our focus, but we've created something brand new with the Elite Advisor Network. Live, in-person sessions 4 times a year, built just for you. If you're a whole life advisor who's crushing it, but wants to grow and scale without burnout, every quarter, Jayson and I walk you through the exact strategies that we've used to create leverage and serve thousands of clients. You'll get accountability inside an amazing group of people who are all leveling up just like you. Look, mindset matters, and the people you surround yourself with matter even more. It only takes 30 seconds. Go to eliteadvisornetwork.ca and submit your application now. eliteadvisornetwork.ca.
Are dividends taxable? And is a dividend classed as income for tax purposes? Because I think this is where people confuse insurance dividends with stock dividends.
Mm-hmm. Mm-hmm.
So what would you say about that?
Well, dividends from a participating dividend paying whole life insurance policy, as long as they are utilized to purchase more insurance. They are used effectively as a premium. And they're used as an opportunity to go and fund another premium. So they stay within the ecosystem of the insurance contract. They're
Right.
not taxable. And in fact, they create an increasing tax-free outcome. So it's actually the exact opposite. However, dividends have different options. And so when you're designing the policy and you're working with ABC advisor, there's check boxes on the application. What would you like your dividends to do if you receive any? Do you want to receive them in cash? Boom, taxable. Do you want to use them to reduce the premium? And then eventually they become, that goes over and exceeds, and then they come out to you. So like there's a couple of options available. What is the most effective and efficient model? Widely popularized is the use of paid up additions. And so that's one of the options. It's called a dividend election. Coincidentally, election, you're checking a box like you're at the voting booth. What am I going to vote for my dividends to do? And if you vote paid up additions, they are a dollar is buying a much greater than that dollar amount of death benefit that it's tax-free the moment it's paid. So you actually create the exact opposite of taxation. You create an increasing tax-free outcome if you use it correctly.
100%. And the tax treatment, it can vary based on the policy owner's decisions and behavior. And so, like Richard said, when dividends are chunked right back in to purchase more paid up additions at no additional cost to increase the death benefit, which in turn increases the total cash value, which in turn increases the long range policy performance. Insurance dividends that are declared and paid from a life insurance company are not the same thing as dividends that you would receive on stocks that you own in publicly traded companies that distribute dividends. Even though people use the same word, they're definitely not the same thing.
Go ahead, take a look at the next episode down below, and make sure you get a copy of our book, Cash Follows the Leader. Go to cashfollows.com and get a free copy right to your inbox.